And there we go. We are officially starting because it is at 6 o'clock Eastern time here in the US. So welcome to today's session. This webinar is titled The Successful Investor. My name is Brian D'Amico. I'm really excited to be here tonight. I am joined by my team. I got John Rabu in the background. Probably will have Todd Schaefer in the background as well. We are here to help you learn how to be a better investor by showing you how to buy stocks, buying and selling stocks, basically. How to buy stocks the right way, when to buy them, and when to sell them. All right. I'm excited that you're here today because the information that I'm going to show to you has changed my life. I know it's changed a ton of people's lives that we've worked with. I've been coaching in investing for the past almost 20 years now. And the techniques that we're going to be looking at today have helped so many people. And I'm glad you're here today because I know it could help you as well. There's kind of a big theme in today's kind of the underlying premise of why you're here is I want you to understand that until you know how to take control and make money in the stock market, you'll be at the mercy of outside forces. You know, what the central banks set interest rates to be, which affects what you get with bonds and CDs and savings accounts. And you're at the mercy of what the government says you can get through retirement. You know, you're here in the States, it's Social Security. When you can get it, how much you can get. Instead, you want to be the one in control. And my promise to you today is that in this webinar, you're going to see how you can safely and steadily grow your portfolio every year without taking unnecessary risk. And you can have confidence of knowing when to buy and sell. All right. Your system is the thing that determines your success. Not luck, not some other things. It's going to be your system. And when I talk about system, when I refer to a system, it's going to be a system which has rules in place for when to buy, what to buy, and when to sell. Which is why today's webinar is broken down into those three main themes. I do want to say that some of you might be here and you might already be good at investing, which is great. What you're going to learn today, I believe, will help you get a little bit better. Now, if you are a little bit unsuccessful right now or struggling, I definitely feel today's webinar will help turn that around and help you become successful. All right, my name is Brian D'Amico. I mentioned that a moment ago. I've been working here at VectorVest with investors and retirees for almost 20 years now. I'm actually one piece of an entire team. We have a huge team here at VectorVest of coaches and instructors here to help you become a successful investor. And I'm confident that everything I'm going to show you today will help. We've been in business here at VectorVest. We've been coaching people for over 30 years. I think it was around 1988 when VectorVest officially became incorporated. So we've been around a while. We're not some fly-by-night training company. We've been around a while helping people for a long, long time. All right. So the things that we've done, we've helped a lot of other people just like you and me. And that's why I'm confident it can help you as well. All right. So when people first come to us, a lot of times we hear some similar things. And if the things I'm about to say ring true to you, can you let me know in the chat? Just type into the chat, hey, that sounds familiar. That's kind of like what I'm going through. All right. Remember, this is a very interactive webinar. So when people first come to us, they say, you know what, I'm a little frustrated because my account's not really going. It's not growing the way I want. I feel like I'm just kind of spinning my wheels right now. All right. And I'm not growing my account enough, and I feel I'm not going to have enough when I retire. And I'm afraid that I might have to scale things back a little bit, and I'm not going to be able to live the lifestyle that I really want to live. Yeah, Deacon, you're the first one in. You say, hey, that's me. What people tell us is they say, the reason I'm coming to get more education is what I really want is I just want to consistently grow my account. I want it to grow larger and larger. I don't want to become a millionaire overnight. I just want to consistently grow my account, and I want to be confident in the things that I do, that I could also be self-sufficient. I want to be able to look myself in the mirror and know that I'm able to do the things that I need to do, not only to provide for myself, but also my family. If you're like me, I've got 2 children. One of them is going to college next year. The other one is going to college the year after that. Actually, my daughter's going to college in August, actually a month. I'm going to have a half empty nest syndrome going on. So you want to be able to provide for your family and be there for them. And I want to give that to you today. And that's why we put today's webinar together. I think over the past 20 years, I've probably made all the costly mistakes. So I've learned how to fix those, and I want to show you how to do that. So my goal today is to show you how to fix those costly mistakes. And in today's webinar, we're going to be looking at, first off, the exact criteria to use to pick the right stocks. That way you don't have to be thinking, oh man, what should I be looking for? Where do I look? Did I pick the right one? Then we're going to be looking at 3 keys to determine when is the right time to be buying those stocks. And we're also going to be talking about when to sell your stocks so you can have peace of mind knowing that you're minimizing losses on your losers and you're protecting profits. And today's webinar is actually built on results. Over the decades that we've been in business, we're not just putting together a webinar based on some hypothetical things that we think might work. These are based on real results that we've gotten, as well as from our clients. Some of the clients that we'll talk about today that shared that they wanted to share what they've done with you, we're going to be looking at what Ross did, where he went from just being totally haphazard with his investing and spending a lot of time to where he was then getting 33% in the first 6 months after he learned what you're learning today. We'll be looking at Tim, where again, he went from trading in the dark to about 30%. We're going to be looking at Kamel, who he almost gave up on investing. He was totally unsuccessful and he almost gave up, he said, to where he's now one of our top people, where he was sending me screenshots of how well he was doing. But now he's almost automating things with something that's actually just sending him alerts on the things that he needs to do. And we're going to be looking at Carol, who was able to fire her money manager and hire herself. That's one of the coolest things you could possibly do. So now is a great time. Turn off any kind of distractions. If you have a cell phone, you could either mute it, but the best thing you could do is just turn it off for 1 hour. You can close your door. Just don't multitask. Don't check your email or your social media. Just dedicate 1 hour, right? Because you want to stay focused and give this your full attention, because you're going to be learning something that can make a huge positive impact on the rest of your life. Very quickly, some quick notes about today's webinar. It is very interactive. I'll ask you a lot of questions throughout the session. Type them into the chat, comment a lot, question a lot. I've got my team in the background to help you in case I don't see your question. I'm going to give you everything I possibly can for the time that we've got here today. We've got about 1 hour in today's session. Of course, there's only so much we can cover in an hour. What I'll do is at the end, I'll show you how you can get more help to get your investing to the levels that we're going to be talking about today. So if you're good with all that, just give me a big yes in the chat box and let me know that you're excited and you're ready to go, and we will jump into how to pick the right stocks. And I love Deacon. He says, my phone is off. I am focusing. And I see a bunch of yeses from Pam, Ken, Tasha, Dale. Awesome. Great. Let's talk about how to pick the right stocks. So let's first say this. When we're talking about how to pick the right stocks, there are a bunch of different ways to invest in the market. There's day trading, there's swing trading, there's position trading, there's options trading. We are going to be looking at one technique, which I think, and I know actually, if you've been struggling, you really need to slow things down and do a more prudent approach. Just like if you're teaching someone to drive. Any of you with teenagers, if you are teaching someone to drive, you don't say, all right, well, you're struggling with driving, slam your foot on the gas, let's go faster. No, we're going to take a step back, we're going to slow down, we're going to take a more prudent approach to picking stocks and managing them. That's what we're going to be looking at today. How to pick them. All right, so how do we do this? Let's take a look at an example here. This is a stock you might think is good. And I know I'm not giving you a lot of data on the screen for a reason. If you look here, the stock is going up and you might buy it thinking it's good, but after you buy it, it either goes nowhere or it goes down and you're left wondering, well, what happened? What's the problem causing this to happen? Well, let's look at three of the problems, and then we'll get into the solutions. Problem number one is you're buying stocks already going down. So what you're looking at here, this is just the same stock that I showed you a moment ago. I just showed you this little piece right here, except what I've done is I've zoomed out to give you a bigger picture. And most investors have been trained to buy stocks that look like this. And when I say it looks like this, it looks like this, that they're coming down. You might hear about it on TV, or you had an advisor tell you, hey, let's buy this stock and let's get in here and let's ride this thing all the way back up to where it was before. Understand this, that stocks that are going down typically continue to fall. So if you buy a stock that's going down, don't be surprised that it continues to fall. Problem number one is you've been buying stocks that are going down. That might be one reason that the stocks that you buy continue to go down. Problem number two, what's another problem? Maybe when you're buying your stocks, you're not really paying attention to anything else but the dividend. My co-coach, his name is Todd Schaefer, he and I coach clients every Thursday. Right? Tomorrow's Thursday. We get together with our clients every Thursday and we do a coaching session with them. And frequently we hear people in those coaching sessions have us pull up a stock and we look at the stock and they say, hey, but it pays such a great dividend. Understand this. Dividends are good. Getting dividends, I want you to think of in this technique as an added bonus. Don't just focus on the dividend. If you're buying a stock just because it pays a nice dividend and you're not looking at anything else, you could be setting yourself up for failure. Because what happens a lot of times is people who do that, they're letting that stock fall 10, 20, 30, 40, 50% just because it paid many times only a 3% yield. This is an example of a stock that paid an 11% yield, and you might have bought it and watched that thing drop. This actually dropped 62%. The main thing to understand here is that if you keep making that trade-off of letting stocks drop 30 some odd percent just to squeeze out a 3% yield, you're never going to be able to consistently grow your account by making that trade-off. Now, problem number three is maybe you're buying stocks and the reason you're buying a stock is just because of the name of the company. Maybe when you got into investing, you didn't know everything and you just said, all right, well, I'm just going to buy the stocks that I know. You know what? Hey, I shop at Walmart. Let me buy Walmart. I own an iPhone. Let me buy some Apple. So that's the reason why you're picking your stocks of these well-known companies. But just because a stock is well-known, it doesn't mean it's the right stock for you to own right now. But the real problem isn't necessarily any one of those individual things. The real problem is this. You don't have any buying criteria. When you have no buying criteria, you're left saying to yourself, what should I look for? And that's when you start saying things. Oh, let me look at the dividend. Let me go to the company name. That's when you start trying to figure out what to look for. So you don't really know what to look for. And if you don't know what to look for, the market has a great way of giving you a lot to look at. Now, there's a lot of data out there. And then when you eventually pick a stock, when you eventually find one, you still wonder if you picked the right one. Right? I have a bunch of pineapples there because I went and my wife said, go buy a pineapple. I went and bought a pineapple. I thought I picked the right one. She said, no, it's not the right one. I was like, what are you talking about? It looks good to me. She gave me a list of criteria. I guess you have to sniff the bottom or there's some coloring. There's rules on picking the right pineapple. Who knew? The thing is, I could have left that store and tasted the pineapple, and if it tasted bad, I would have blamed everything else except for my pineapple picking abilities. It was a bad shipment. It was damaged in transit. It was a bad season. Whatever. Nothing could have been the fault of my picking abilities. And does that sound familiar with your stocks? If you have a stock and it goes against you, you're saying, oh, the market gods are against me. Or you're blaming everything else except that you picked a bad stock. And if you're picking bad stocks without the right buying criteria, you're left holding on to bad trades too long. You start to say things like, I can't be wrong. Honey, I bought the right pineapple. I can't be wrong. It looks good. You say the same things with your stocks when they start to go down. I can't be wrong. And then eventually you might say something like, it'll come back. So what you need is the right buying criteria, and you need to use it. Let's look at the 3 criteria to use to pick your stocks. All right, so we're going to go through the criteria. I'll ask you to write it down. That way you have it. Then we're going to look at an example stock. And then I'm going to give you a test and show you several stocks and have you give me a yay or nay on whether it meets the criteria. So there's 3 criteria. There's an earnings component, there's a safety component, and a trend component. When it comes to earnings, I want you to look for 2 things. Make sure the earnings are rising and positive. Of course, they could be getting less and less negative, which is okay, but I want you to be picky, and I want you to make sure that the company's earnings are rising and positive. Now, when it comes to safety, you want to look for a couple things as well. It'll start with the chart. You pull up a chart of a stock and look at, we always start with a 1-year chart. We're not going minute by minute, by the way. We're going to start with a daily chart, 1 year, and then we're going to expand it out 3-5 years to get a bigger picture. And what we're looking at there would be, we want to look for the price pattern. Is it choppy? Are there a lot of gaps? If there's a lot of gapping action in the stock's candles, that's not a good sign. Yes, it could gap up, but it could be gapping down, and that's not giving you a good sleep at night factor. You want to be able to go to bed at night with your head on your pillow and be like, you know what? Tomorrow my stock's it's not going to hurt me too much if it goes down. So you're going to get that by looking at the history on the chart. Start with 1 year, go to 5 years, and get a feel for the volatility of the stock's price. Look at the worst drawdown. Is it something? Did it happen too quickly for you? If so, move on to another one. Look for something that is fairly smooth. And ideally, now this is a nice to have, look for one that is undervalued. Here at VectorVest, we actually calculate the value of each of the stocks that we track, and that makes it really simple. So we just have to look at the price compared to the value. And if it's underneath the value, that's an added plus. Now, when it comes to trend, there's 3 things to look for. Number 1, you want to make sure that the trend of the stock is smooth and steady. So you notice that there's a little bit of overlap here with the safety. So you want it smooth and steady, but not just smooth and steady, you want to make sure it's going up. All right, so smooth and steady would be like this. That'd be more like a dividend-paying stock that just goes sideways. We want the best of both worlds. We want it to be smooth and steady going up. And how do you know it's going up? The definition of an uptrend is higher highs. Something like that, where it's hitting higher highs. Because no stock is going to go straight up like that. So let's look at this visually. This is a graphical example of steadily rising prices. I'm saving a little bit of time here because we only have an hour, so I'm showing you a 5-year chart. Remember earlier I said we start with a 1 year and then we expand it out, but I'm just trying to save a little time. First off, when you're looking at a chart and you do the same thing for the 1 year and the 5 year, you could say, well, let me just draw a line diagonally across. And I just want to make sure it stays close to that line. This one does that. It actually rode the line and then it dipped below, but then you see it just ran parallel, so it has the same shape. What you want to avoid is something where it kind of goes up and it has these wild swings in the price. You want to avoid something like that. Even if it ends way up here, you want to avoid these wild swings because you'll never let it get up to here if you own it. If it drops down quickly, you're going to be selling it and you're going to be like, oh my goodness, I just took a loss, and you move on to another stock. You'll never experience that big gain. So look for smooth and steady. We call that the sleep at night factor. The other thing to help you out here is if you break this down into, let's see, let me do my best, 5-year chunks. You notice how each year it's higher than the year before? That gives you a little bit of confidence knowing, all right, well, if I buy it here, it has that upwards potential because it's done it every year leading up to now. It gives you more confidence that if it starts to pull back, that well, historically it continues to move higher. And that's why when we talk about stops later on in today's webinar, you're more confident giving that stop more room, a lower stop. You're not going to put your stop so tight. So what is going to help a stock do this? Well, it's this next part, which is earnings. Write down earnings is the engine. Earnings engine. Earnings is the engine that drives stock prices higher over time. I work for a company called VectorVest, which I mentioned earlier, and I think a lot of you here today are also use VectorVest. At VectorVest, we calculate earnings. We have a formula for earnings per share, and this is our proprietary formula for a 12-month forecast. If you don't use VectorVest, you're kind of left going and finding the earnings data yourself, which will take longer. We like ours. It's quicker, and we think it's a lot more accurate to using our forecast. But the main thing to understand is this. You want to make sure that the company's earnings is growing each year. That's the engine that'll drive stock prices higher over time, because people are more willing to invest in companies that continue to grow, come up with new products and new ideas, and make money. All right? When you have these things working together, price and earnings, it starts to build confidence that you're picking a good stock. Here's an example, and it's an example of Windstream that we looked at earlier. I use it because there's actually a real example from one of our coaching clients, and you can see his name here is Steve. When he first came to us, before he went through all this training that you're going through here today, he came to one of our webinars and he said, hey, what do you think about Windstream? I just bought it 2 days ago. And you can see over here, if you look closely, he bought it 2 days prior, which was that last green light. In the chat box, give me a yes or a no. Has that ever happened to you? Where you buy a stock on the very last up day and it does nothing but it seems to go down after you buy it. Has that ever happened? Tasha, you're the first one in. Tasha says yes. Afalabi says yes. So you can put yourself in Steve's shoes. So Steve comes to this webinar and he's like, I just bought this stock 2 days ago and now it's falling. What do you think? Well, what do you think Todd and I did with him? Todd and I, we went through the buying criteria. We went through the buying criteria with him. We pulled up the chart and we said, all right, Steve, price is in a downtrend. Earnings is falling. Price is over what we calculate the value to be. We said, hey, this meets none of the buying criteria. So basically, you should have never bought this stock if you were following the buying checklist. Now, of course, the decision was up to Steve. We can't tell Steve, go sell the stock, but he actually typed this into the chat box. He said, I'm selling it now. And it actually was a good decision to sell it because it ended up dropping another 10% after he sold it. And then a few months later, it was down 62%. In fact, years later, I went back and I looked at that stock and I'm like, well, how's Windstream doing? And the company went bankrupt and it was trading at 20 cents. And you imagine if you don't sell the stock, what would Steve have been feeling? And all of you, like Bob and Deacon and Mike and Tasha, who have experienced this, if you had a stock fall after you buy it, you're like, oh man, if it can only get back up to where I bought it. And it starts to get back up, you feel hopeful, right? And then it falls. And then you get hopeful again. And now this thing is just sitting in your portfolio grating at you, right? It's like nails on a chalkboard. I think we're all probably old enough to have remembered chalkboards. And so this thing is sitting in your portfolio, bringing you down. The main thing to understand here is it could have been avoided. It could have been avoided had Steve used a buying checklist, the right buying criteria. It could have all been prevented. So we're going to do some preventative measures here by using that checklist, and we're not going to buy those stocks to begin with. When you use the buying checklist correctly, you'll be able to find stocks that have a higher probability of rising after you buy it. It's not a 100% guarantee, but a higher probability. you'll be able to find stocks. I'm going to show you a few examples from our we have a paper portfolio that we track with our clients each week. You see this one, we actually just sold back in January. It doesn't matter the ticker symbol so much. What I want you to get an eyeball for is the pattern, is what we talked about here. We bought this stock here. It was smooth and steady. It was rising with rising earnings. When you use the right entry and exit rules, it allowed us to get a 25% gain in a few months. Here's another one. Just take a look at the pattern. There's a lot of stocks out there like this with smooth and steady. And here's another thing. Even when it pulled back, the pullback was smooth and steady. And then it rose again, got in. It was a 15% gain in a couple months. And here's Lowe's. I think we all know Lowe's. This was just a beautiful stock chart when we bought it. And it was a 23% gain in 3 months. But again, rising price, rising earnings. When you follow the right entry rules with the buying criteria and exit rules, that's what's going to allow you to stack winners like this. That's how you'll consistently grow your account. So I want to do this with you. Remember earlier I said I'm going to show you some examples. I just want you to give me a quick yes or no. If you want to give me a maybe, you can give me a maybe, but primarily it'd be yes or no's. I'm going to show you 5 examples. They're all 5-year charts. I took all the ticker symbols off. I took all the dates off. I just want you to get used to looking at patterns. Is this the type of pattern that would strike your fancy? Would you say, wow, example number 1, I really want to put that in my portfolio? Perfect. You guys are all very quick. All no's. Mike, Afalabi, Joy, all no's. I wanted to start with an easy one. How about this one? This one, remember, it's a 5-year chart. So this right here is probably from here to here is probably a year and a half, maybe 2 years. All right, I see all no's. I see one maybe. The thing that gets a lot of people's attention is the earnings, right? You see earnings. Look at that strong earnings, and then it just kind of goes flat. Don't let the earnings engine distract you from what is glaring right in front of you, a 2-year downtrend. All right, so that's going to be a no. What about this one? Akram says yes. Reginald, yes. Yeah, see, you see how these things stand out? It's like a beauty stands out to your eyes. You'll see something, you're like, wow, that's beautiful, like a beautiful sunset or a beautiful painting. When you see beauty, your eyes, it triggers something in the brain, and you say, wow, that's great. And it immediately stands out to you. Smooth and steady. Smooth. This little pullback here was a major pullback in the market, and almost all stocks pulled back during that time. Rising earnings. So this will stand out. Remember, we're just building a shopping list here. We're not necessarily going to buy it on that day. How about this one? Yeah, so this is a no. And 4 years, it did great, but some stocks just fall out of favor. Look at earnings is falling. So now is probably not the best day. And then how about this? This should be an easy one, right? I think this is, you might think, well, is that the same stock as number 3? Is that the same stock? No. I mean, like I told you, there's a lot of stocks that look like this. Remember, this was the time where every stock got killed, but it resumed its uptrend and it's got nice earnings. So there's a lot of stocks out there that look like that. So be picky. When you use a buying criteria that we just looked at, in the chat box, let me know. Would you feel more or less confident in the stocks you pick? More or less confident. Yeah, Deacon, Kaz, Deanna, more. And that's the thing. You want to feel confident in the things you pick. You want to be proud. You want to go to like your buddy and say, hey, look at this stock. This stock's in my portfolio. What's in yours? What's in your wallet, right? What's in your portfolio? This is in mine, right? So you want to be proud of the things that you pick. Remember earlier I was telling you about how we were going to be talking about a few people. One of them is Ross. Ross sent me an email telling me about his journey on becoming a successful investor. He said he actually was an experienced investor with many years of trading under his belt. but he had no system, and he spent a lot of money on newsletters and gurus, and what he was doing was just kind of jumping from one thing to another. He said it was haphazard and time consuming, and he ended up over trading. He never committed to one strategy, and his results were below average. He was determined to turn things around. He took the training that you're going through right now. He actually took a more in-depth training that we do called the Successful Investor Course, which is like a 6-week course. But it's all built on the things that you're learning right now. He was able to build a diversified portfolio, but he focused on safety and earnings. And he was able in 6 months to be up over 33%. And some of the cool things are that he spends 15 to 30 minutes a night just managing his portfolio now instead of being time consuming. He's more confident and relaxed. It's more fun and less complicated. And that's the way it could be. So the first shift, and one of my jobs today as your coach is to help you make a few great decisions, is hopefully you've gotten the gist of, instead of picking stocks that you're not quite certain about, where you have uncertainty, to using buying criteria and you're picking high probability stocks. So that shift is to where you're using buying criteria. All right, that's going to be one part of your system. That's actually the what to buy. Remember earlier, your system, one of the pieces is what to buy. The way you pick your stocks is one part of your system, and it's needed to help you consistently outperform the market. So now let's look at, this is the when to buy. Right? The when to buy. Now that you know what stocks you want to buy, you've got to know how to buy them at the right time, right? Most people have been taught the old philosophy of, hey, just buy anytime because the market just goes up forever, right? But if you do that, it could quickly turn into buy and hope. Oh man, I hope this comes back. Instead, you can buy at the right time and steadily grow your portfolio using the strategies we're going to look at right now. One of the things that's been difficult for a lot of people is when the market goes up and down. And when the market is up and down, it seems like every time you get in, the market seems to reverse. Your portfolio ends up being on some roller coaster ride. When you're not able to buy at the right time, it seems like you take this slow couple of steps forward, and then you take this quick 3 steps back, like a roller coaster, and you second guess yourself. You say, "Well, should I get in? I don't know. The guy in CNBC said it seems like I should buy." You're never sure on what's going to happen. So let's talk about what could be causing, again, the stocks that you buy to drop. We talked a little bit about it earlier, and that's why problem number 1 is you pick a bad stock. You might have just bought a bad stock, and that's the reason why the stocks in your portfolio drops, right? The stocks you buy drop after you buy them. One problem for a lot of people is just the stock itself. And if you remember, we talked about that maybe the stock was already in a downtrend. Maybe it was too volatile. Maybe the earnings were dropping. It was just bad stock, and you shouldn't have picked it to begin with. So picking a bad stock is one reason why the stock you buy goes down after you buy it. Problem number 2 is people just get bad advice because you might not have been confident in your own ability. So you flipped on the TV or you went to an advisor, and I'm not saying advisors are bad. I bet a lot of them have the best intentions for you. They want to help you. But a lot of advisors are following the same philosophy that they were taught, which is, hey, just tell people to buy stocks anytime. It's a good time to buy. So wherever you got your advice, most of the people teach it's always a good time to buy. Problem number 3 is you feel you're cursed with bad luck. You feel the market gods are against you. It's maybe not your fault. It's something is sitting on your shoulder waiting for you to hit the buy button. There's no such thing as bad luck. But here's the thing. If you feel you're cursed with bad luck, you're going to cause bad things to happen to yourself because you will buy a stock like Steve did, and a day or two later, the thing starts to go against you, and you're like, oh, I got to get out of this thing. It's bad luck again. And you sell it, and then what happens? It goes back up, and oh man, here we go again. And then you buy it, and then it drops, and you're in this heavily trading thing, just like Ross was a moment ago, where he was just trading too much. The real problem, the biggest problem, is timing. You just got in at a bad time. This is the biggest reason that stocks drop after you buy them. Timing. And that's why so many of you at the beginning of today's webinar were saying you struggle with timing. Because you had a feeling inside that you're just not good at getting in and getting out at the right time. So right now we're going to talk about the getting in part. We need to have clear entry signals. Something that says, hey, enter here. And it should be a daily signal. You need to know whether today is better than yesterday, and whether yesterday was better than the day before. When you do this right, you're going to have these clear entry signals. So let's look at 3 keys. The first key is the biggest one. I probably should have ended with the most important, but I'm starting with the most important, and that's the market. The market's got to be in an uptrend. If you know this saying, and I bet you do, a rising tide lifts all boats. The same is true with the stock market. If the overall stock market is in an uptrend, you know what that means? Most stocks are going up. And that's where like a monkey can throw a dart and hit a stock and has probability on his side that stock is going to go up. So you want to make sure when you're buying stocks that the overall market is going up, to put probability on your side. If you continue to buy stocks and you ignore the market, or worse yet, you happen to buy a stock when the market's falling, trying to nail the bottom, the results could be disastrous. And this is a severe example from Robert back during the global financial crisis. I use this because, this happened to a lot of people, and it was like rinse and repeat. It happened to a bunch of people again last year. So Robert here, let me get my laser pointer. There we go. Robert here, he retired a couple of years before the global financial crisis. He's like, oh, great, I'm retired. I get to enjoy life. The global financial crisis hit. He had a financial advisor helping him out, a professional advisor, who said, you know what? Let's ride this out. And what does that mean? That means they continued to buy stocks and sell stocks and buy stocks and sell stocks throughout that whole crisis. He ended up losing 40% of his retirement account. He thought he'd have to go back out and get a job. We don't want that. Here's a look at like a 20-year look at the market. For those people who say the market always goes up, it always goes up. Well, hey, I'll grant you the fact that 20 years ago it was here and now it's somewhere over here. So it's higher. But you've got to also concede that for 3 years here it went down. Then it went up. Then it went down, and you're basically right back to where it was 6 years earlier. Then it went up, and you're right back to where you were 4 years earlier. And it does that often. Instead of living that roller coaster ride, right? Instead of living that roller coaster ride, what we say, and we advise you to do, is when the market's going down, you stop buying. Only buy when the market's going up. Stop trying to nail the bottom. Don't buy and hold either. So you're not going to try and get in here. Instead, once the market starts to go up, you're going to get some signals, and I'll show you the signals that we use in a minute. I want to give you the overall philosophy here first, is that when the market's going up, you're going to get signals to buy, and that's when you're adding to your portfolio. Now, there's going to come a time when the market turns around. See how it curls over here? Well, eventually you'll get a signal. You'll stop getting those signals to buy. So you're not going to be buying any more stocks for your portfolio. And stocks will start to get sold from your portfolio when they hit their stops. Now, sometimes the market I shouldn't say reverses. It just goes back up. Great. Well, then you start buying again if you have spots in your portfolio. On severe cases like this, you are eventually selling your positions. You'll be in cash probably about here, and you don't have to experience this drop. That's why last year during the COVID drop, most of our clients who were following these rules that we're talking about, maximum drawdown in their portfolio was about 10%. And then they were in cash for the rest of the drop. Some people took advantage of the rest of the downturn because they're a little bit more aggressive and they were doing other things like shorting the market or buying puts, things like that. We're not going to get into all those details right now. I shouldn't have distracted you with that. So right now, I just want you to understand you're going to buy when the market's going up. Let's zoom in. This is the past year. The market went up, it went down, it went up. Here at VectorVest, we have a signal. Now, some people, if you don't use VectorVest, you're going to be using things like moving averages, which is okay. There's a delay in those moving averages, and it doesn't give you a daily signal. For example, let's say, the 10-day is above the 40, or the 20 is above the 50. Some people use shorter-term moving averages, like a 3 and an 8. That's being a little bit more aggressive, but it doesn't say, all right, well, today is better than yesterday. So we use a thing called green lights, and it's very simple. It just shows up. Here, I'm showing it on a graph, but it just shows up right on the front page of our software. A green light just says, hey, today is a good day to buy. If you don't get a green light, it says, all right, don't buy. It's that simple. And you can see why we like them so much is during uptrends, that's when you get greens. During downtrends, no greens. During uptrends, you get greens. All right? During downtrends, you got one little green sneak in there because the market went up a little bit there. But that's okay. If you had one buying day out of a 2-month or month or more drawdown, we'll survive that. All right, and then you get right back. Look how close this was. Oops. Helps if I draw a straight line. Right near the bottom. Remember, you're not going to try and nail the bottom, but you just hop right on back on board that train as it continues to move higher. All right, so market trend. That's number 1. Number 2, how do you know when it's the right time to buy? The stock's got to be in an uptrend. And we did talk about this a little bit earlier, but you want to make sure not only is the stock in an uptrend, but it also needs to be going up on the day you buy it. Don't buy a stock that's moving down because that could be the first day in a long drawdown. So make sure the stock is still going higher. But let's talk about the trend first. Here, remember Steve from earlier? I'm showing it to you again because it's a mistake a lot of people make. This stock was in a clear downtrend. Even though it was going back up here, when I talked to Steve, we said, all right, let's draw this little trend line. That's a downtrend by definition. Lower highs, lower lows. So Steve actually bought it when it was touching the trend line. That's not the best time to buy. You want to, if anything, wait for it to break above the trend line. Better yet, wait for it to start to hit higher highs and higher lows. All right, so you don't want to buy when a stock is in a downtrend because they continue to fall. Instead, you want to look for stocks that are in an uptrend. Uptrend is defined as higher highs, higher lows. Why is that important? Because you can clearly see that this stock over here went to lower highs and lower lows. And that'll tell you, hey, now's not a good time to buy it. So if you didn't own it, you would see, oh, well, now's not a good time to be buying this stock throughout this whole period here. Wait for it to start to hit higher highs. And so number 2 is make sure the stock that you're looking at is in an uptrend by definition. Higher highs, higher lows, and when on the day that you're going to buy it, make sure it is ideally hitting another new high. And then number 3, now this one, you're not going to see it on 100% of your trades. Right? You want to make sure your stock is clear of resistance. If not, there's a good chance your stock will fall right back down. So this thing called support and resistance, like I said, it doesn't come in on 100% of your trades, but you want to make sure you can spot it. We want stocks to, you see here, this green line is busting up through a ceiling. Think of that ceiling as resistance. And a lot of times stocks will go up and hit something and hit it and bounce down. And if you hit your head on the ceiling, what do? You're like, ow. And you crunch down. You fall down, right? That's what stocks do a lot of times. They hit the ceiling and they're like, ow. So just like this with CNC. Now, this is an example from some time ago, but I bet, and I say I bet because we've looked at a lot of stocks recently, there's a lot of stocks right now that are doing something similar because the past several months, the market, for the most part, has been kind of going sideways. There's a lot of stocks right now that would probably look just like this, that had a strong rally and now are right near a thing called resistance. And if you don't know what resistance is, think about it like this. The people who did not sell the stock back here, they're thinking, if it ever gets back up to there again, I'm going to sell. So there's a lot of selling pressure every time it gets up to here. And what happens a lot of times is that it can't overcome the selling pressure. Since there's so much selling pressure here, if a stock is able to break above it, that's going to be bullish for you. That is what you want to look for. And here's an example of that. So here's a stock that was in an uptrend. It pulled back. It fell out of favor. Earnings was still good. So it's got the engine. So we want to see if this is able to resume the uptrend. Well, here's an area of resistance. Here's a first candle that's kind of straddling it. That'd be an aggressive entry. Think of it, what are they called? Prairie dogs? I get this wrong. I watched a show called Meerkat Manor a long time ago. A meerkat or prairie dog or something like that, where they poke their head out of the hole and they're kind of seeing if it's okay. Like looking around, is it okay to come out? That's kind of what the stock is doing. Sometimes it's not okay and they come back down. So a more conservative / prudent thing to do is to wait for a full candle above. That's like the prairie dog coming out of the hole saying, woo, coast is clear. And then what ends up happening a lot of times, clear sailing after that. So those are 3 keys that will help you buy stocks at the right time. I want to ask you a question. If you were to look back at your trades, what percentage of the time have you made sure to look for all 3? Just a quick, it doesn't have to be exact. You don't need to go calculate it, but so I see a 0. I see most of the time, nice work, Reginald. 0, none, a 0 from Chris and Afalabi, a 0, 50-50, says Kaz. Tasha says I haven't. So I see a lot of basically no's and nones. Ram is very specific. He says 89% of the time. You crack me up, Ram. So let's just say this. If it's less than 100%, you have some work to do. You're going to be building that to get it up to 100% to be looking for all 3 things. The market, the stock, and look for support and resistance. If you remember Kamel, I showed him earlier. This is why he almost gave up on investing. Down here it says he questioned his ability. He had no discipline. He told me he was buying falling stocks. Not only that, he was doing it in down markets and on down days. It was like the trifecta of badness. And when you do that, this is what he ended up doing, just hoping they would come back. That's why it turns into buy and hope. When people buy and hold, it turns into buy and hope. But Kamel, he didn't give up. He took the training that you're taking right now. And again, he also took the full training called the Successful Investor. He went through 6 weeks of learning. And now he cracks me up too, just like Ram did earlier, because he would send me emails with images from his cell phone. He would take pictures of his computer screen. And he's like, hey, Brian, I'm up 22%. He would send me a picture of his retirement account. I'm up 43%. So it was great. So this was somebody who almost gave up and was doing everything wrong to now he was implementing the things that we're talking about. He's actually now automating things. And some of the cool things about this is if you look right here, down to the bottom right, he had 11 winners, 10 losers during this period. He's only a 50-50 trader. So you don't have to be getting winner after winner after winner, 100% winners, if you're using the right rules of buying and selling. And all of this is due to the systems that we've been talking about today. All right. So strategic shift number 2 is to just get rid of the roller coaster life, roller coaster life. Get rid of that. Get rid of the buy and hold and the buy and hope, and start to use buying signals and use rules that tell you that it's okay to be buying and buy at the right time. That way you can start to see that steady climb in your portfolio. Okay? All right, buckle up. Number 3. Wherever you are, kind of sit up straight in your chair, kind of get the blood flowing again, because we're going to look at how to know when to sell. Because now that you know the stocks that you want to buy and when you want to buy them, perhaps the most important thing to know is when to sell them. This is the thing that most investors have the most trouble with, and you shared this with me earlier in today's session. The thing that people struggle with is something like this, where you get a stock that's going up, it's at resistance, and you wait for it to poke its head above, out of the hole, and actually come out of the hole, and you're like, oh, great. And now the stock goes for you, and you have this winning trade. But since you don't know when to sell, you watch a winner turn into a loser. And a lot of times, these losing trades, when you don't know when to sell, especially if it's a good stock, a good pineapple, people hold on to these things and they suffer these big losses because they say things like, oh, it'll come back and, well, I might as well hold on to it now. When you suffer big losses like that, number one, it's emotionally devastating to you. But financially, it's so hard to recover those losses. Because if you have a 50% loser, that stock's got to go up 100% to get back to break even. That's also when you start to feel like a failure, because you see this in your portfolio every day. You see this stock and it's like, oh my goodness. And it reminds you of a failure. And it makes you feel like a failure. What you need to do is you need to know your exits. You need to know them right away, right from the beginning. Just like when you get on a plane, they tell you how to get off the plane before the plane even moves. They'll tell you how to get off the plane if it lands safely. You go out the door, right? You go out safely through the tunnel, right? They tell you how to get off the plane if there's an emergency. So with your stocks, you want to be something very similar. You need to know when to get out of the trade if it's going for you. You need to know when to get out of the trade if it goes immediately against you. In our full course that we teach, which I've mentioned a couple times, the Successful Investor in that 6-week course, we actually have several selling rules built in and a bunch of things to look for, and it's all rules-based. In the time that we've got today, I want to give you 2 that I think will help you immediately. Like, you can leave today's webinar and be like, boom, these are the 2 things that will immediately help me. The 2 things are, and we'll look at examples of this, don't worry. Set your line in the sand. That's number 1. So a line in the sand means if the stock hits that line, you immediately get out of it. You sell it. No questions asked. And number 2 is never give back more than half your gains. It should be more than half. Never give back more than half your gains. So we're going to talk about each one of those, looking at examples. These are trades from our paper portfolio, again, that to highlight those examples. So here's a trade. When you get into it, this is what it might look like. Smooth and steady, right? Smooth and steady, pops up. Now it flattened out a little bit, but then a full candle above resistance. So this trade, you're feeling good about it. We felt good about it. Had rising earnings. Everything looked great. So some people, when they set their line in the sand, in an example like this, they might be like, oh, here's an area of support. I'm going to put my line in the sand below that. Because you want to give stocks room to, we call it room to breathe. You don't want to set your stop so tight. So we give it room to breathe. One of the ways that we do that, we make it very simple. Here at VectorVest, we actually calculate a stop price. That stop price is a 13-week moving average adjusted for the company's fundamentals. So 13 weeks, that's what, 65 days? So if you think about that, that's a 65-day moving average, but adjusted for fundamentals, but just a plain old 65-day moving average gives stocks room to move, especially these good stocks. So that's where you're going to set your line in the sand. That would be where if it hits that with your broker, it immediately gets sold. And your entry is up here, so you have that distance there. This trade, for a couple of days, it went for us, but it fell out of favor. Did we see this, gap down and say, oh, well, let's give it another day. Let's see what happens. No, it hit the line in the sand. And the rule is if it hits the line in the sand, you sell it. No questions asked. We walked away with a 10% loss. It stunk, but you're in that trade and you say, you know what? I picked a good one at the beginning. I followed all my rules. It just did not work out. And you move on. That's a great feeling to have, is to be able to unemotionally sell something and move on. A 10% loss. Now, this just happened to be a 10% loss. Some of them are 15. Typically they're going to be between a 10 and a 20% loss a lot of times for us. We don't have time to get into today things like position sizing, because that's another key part of allowing your stocks that room to breathe. But a 10% loss is a lot better than ignoring your line in the sand and watching that stock go from 40-something down to 25, and you suffer a large loss. All right, let me illustrate the don't give back more than half rule. Here's a stock. Now, we didn't buy it over here. We bought it over here. This is one of our entry points. It was a stock that was going up in price with rising earnings. The don't give back more than half rule means as soon as you're up 10% or more, you want to lock in at least half of that. So if you look at this stock, we sold it at a 17% gain, which means we must have been up over 34% up here somewhere. And then it pulled back and we sold it. Now, some people look at that and they're like, well, why'd you sell it? You guys really nailed the bottom on that one. This thing just went right back up. All right, well, that'll happen sometimes, right? Doesn't happen every time, but it stinks when it happens, but you got to live with it. You locked in gains, though. All right, well, we bought back into it over here. When all of our rules were met, we didn't just emotionally buy back in. We bought back in. All the rules were met. We bought it here. Now, we had a line in the sand set somewhere down here, but it went up. We sold it at about a 9% gain, which must mean we were up about 18% at one point up here. And we sold it right there. Now, some people would say, well, you know what? Guess what they told us? Why'd you sell it? Why don't you ignore your rule this time? Just ignore it. Because last time it went up. Look at this thing. This thing's going up. Well, you got to follow your rules. If you don't follow your rules, what's the point of having rules? This is why you follow the rules. We were glad we sold it here. Sometimes good stocks fall out of favor. Knowing when to sell allows you to lock in gains and minimize losses. Do you remember Tim? I showed you Tim's face earlier. Tim also took the full course, and after he did, he wrote to me and he said that he was on target to do 30% that year. He said prior to learning that system, he would buy what he thought were good stocks and hold them for as long as he could. He never knew when they were losing momentum, though. And he felt like he was trading in the dark. And he would hold on to trades too long and watch the stocks go down. He would wait for them to come back, but they never did. Like I said, after taking the training, he was on pace to make 30%. Now he's making informed decisions. And the cool thing is, one of the cool things is, he's setting his stops once a week. That's what, when you get these good stocks and you give them room to breathe, you can do things like that. He always has a shopping list ready of good stocks. He's sleeping better at night. All right. Here's a question for you. If you were to look at your portfolio right now, do you know when you would sell your stocks? All of them. Look at each one. Yes or no? If the answer is no, we got to change it. That's the first thing that you got to do. You got to set that line in the sand. So go from not knowing when to sell and suffering large losses to having your selling criteria and know when to sell. Set the trade up the right way from the beginning and know where to set your stop so you minimize losses and maximize gains. And that's critical. Write that down. To be a successful investor, your system must include rules detailing when to sell. And your system is the thing that determines your success. So let me give you a checklist. And I'm going to give you 5 things. Just grade yourself. Give yourself a check, or how about an X? Number 1, does your market signal, the one that you use, does it reliably tell you the market's in an uptrend? Now, those of you who are here who are using VectorVest, You might say yes to that, right? I hope you do, because you might be using the green lights right now. If not, maybe you give yourself an X. Are you finding safe stocks rising in price with rising earnings right now? So just don't overthink it. Just give it a check or an X. How long does it take you? And if the answer is too long, then that's an X. Do you know how to use stop prices? And are your stops helping you protect profits and minimize losses? So I want you to see, what did you just learn about your system? So if you look at these 5 things, just let me know, how many checks did you get? Like 5 checks? That'd be great. That's what you want. 5 checks. Tasha, 5 checks. Oh, sorry, Reginald, 5 checks. Tasha says 1 check. 2 out of 5. 3 says Richard. 3 says Chris. 1 says Bob. All right, so if it's less than 5, our goal is to get 5 checks straight down the board. Okay? That would be a complete system. That's where you're using a system and you've got a complete system. That's what Rick did. Rick, he went from where he didn't have a system, because prior to learning the system, he did things on his own. He said he lost almost every time. He would buy mutual funds and kind of be right back where he started. He never knew what to buy, when to buy, or when to sell. You know what that means? If you're a doctor, what's your diagnosis? No system. And he felt like he had no control, helpless and hopeless. So he learned the system, knows how to find stocks and what to look for, knows when to sell and how to set stops. He was up 11.5% in the first month. That was awesome. This is one of the biggest things that we hear, confidence, and he's in control. As you've seen, as we went through today's webinar, without the right system, you might be buying stocks only to see them drop right away. You feel like you're trading in the dark. You might be spinning your wheels. Your account's going nowhere. Today, we outlined the basics of a system that you can use. And when you have that system working for you, you'll know exactly when is the right time to buy. Right? What stocks you're going to buy and when to sell them. That way you can start to feel confident in yourself and have the ability to be self-sufficient. You'll be able to live comfortably and be able to provide for the people you love. So the obvious question right now is, all right, what do I do next? What's the best way to install this type of system in my portfolio? Well, you do have a choice to make. Option number 1 is you try it on your own, learn by trial and error, and you're in the same place this time next year. Maybe not getting the results that you want, financially or emotionally. Option number 2 is you just say, you know what, I'm going to 100% commit to learning the system to become a successful, confident investor this year and begin to consistently grow my account. So if you're ready to do that, if you feel that option number 2 is the best thing for you right now, I'd like to invite you to that full course that we talked about a few times today. The full system that we put together is called The Successful Investor, 6 Weeks to Steady Growth. It is designed to take you step by step through the system that you need to safely and steadily grow your portfolio each year. The outcome of this 6-week course is a complete A to Z system, which will show you how to grow your account and consistently outperform the market with it targeting an average of 15% per year or more. Now, those of you who are VectorVest members right now, you're probably familiar with our Quick Start course, which is right inside the software. This is different than that. This actually goes really deep, and it's a much more expanded version of that Quick Start course. It takes all those things and goes really deep on everything. So this 6-week course, before I get into it, I did want to say one thing, that it's only for dedicated people who take their investing seriously and are willing to put the time in to learn the system. If you're not serious or you're not committed, or if you're someone looking for some magic pill, where you're going to become a millionaire tomorrow, it's not for you. This is for serious people who take their investing seriously. We respect your time and your money and only want to work with people who also take it seriously and respect it. But by learning the system, you're going to be able to have more money, more time, more freedom. So let me just quickly go through the 6 modules. That way you get a feel for all the things that you're going to learn and the transformation you'll feel happen for yourself over the 6 weeks. In module 1, we'll give you a strategic game plan. Right? The outcome that you get in module 1 is you're going to become clear on your goals and objectives. You're going to know what type of investor you've been and how to course correct. That way, if you're off target, you'll start to course correct, right? You'll start to correct yourself. Module 2 is all about getting into the market at the right time. This is important because the market can be frustrating if you don't know what you're doing. If you get in at the wrong time, it can be tough. It can be time consuming to make back those losses that you make. The outcome from module 2 is you're going to be able to understand and recognize what the market is doing at any point in time. We're not just going to be talking about, hey, there's green lights here. We're going to be talking about the phases of the market. All the different phases the market goes throughout its whole cycle. We talked about the green lights today, but there's more to it than that. Module 3 is all about identifying the stocks to buy. This is important because a lot of people waste hours of their life digging around looking for their trades. When they're done, they probably still wonder if they made the right decision. The outcome here is you're going to be able to quickly find and identify the best stocks for your trades. Module 4 is all about knowing when to sell. I told you today that we only could look at 2 of the multiple criteria of knowing when to sell. Knowing when to sell is so important because selling too early or too late can be utterly demoralizing and devastate you financially. The outcome from module 4 is you're going to know exactly when to sell a stock to minimize losses. You'll know, hey, if the stock goes for me, this is what I'm going to do. If it goes against me, this is what I'm going to do. It's all rules-based. Module 5 is all about setting up your trades and your portfolio. You'll learn things about diversification. And remember earlier I talked about position sizing? That's in Module 5. The outcome is you're going to know exactly how to set up your trades to maximize your success. All right, Module 6. We actually get in there to a broker. All right, we're going to show you how to place the trades. This is called the implementation formula. We're going to give you an easy to follow daily ritual and a simple checklist, right? You'll be able to print it out. Print out a checklist so you don't miss a step. So you're going to have complete confidence and peace of mind knowing you're going to be able to implement the entire system. So by the time we're done, you're going to have that system that we talked about to get those steady, consistent gains. All right. We have a few bonuses that we're going to give you today. But before I talk to you about the bonuses, I want to let you know it's 100% money back guarantee. You can go through the entire course. If you feel that we have not shown you a system to consistently outperform the market, you'll get all your money back. Just let us know. Right? If you don't feel like your investment in this course is going to be returned to you many times over, and you don't feel so much more confident in your ability to buy and sell stocks, just show us you put in the work and we'll give you your money back. All right, let me tell you about the bonuses. Number 1, how to protect and profit in down markets. This is important because the market doesn't always go up. So the outcome you get from this bonus module is you're going to know the exact signs to become defensive. You're going to know how to insure your portfolio against large losses and how to even profit and make money and generate income in a down market. And then the second bonus is this is what Kamel has now done. He's started to automate his trading plan. So if you want to take your trading to the next level, this bonus session is for you. We're going to show you how you can automate things. All right. So in addition to those 2 bonus modules, we want to give you the best tool out there. So if you're on today's webinar and you do not have access to VectorVest right now, we want to give you 60 days of access to it. All right, so we're going to give you 60 days of access to the best software that we know of to help you implement the techniques that you learn in the course. Think of it, it's like a 60-day trial. So you can try it out for 60 days. If you like it, you could choose to continue with it. There's no obligation afterwards, but it's 60 days. Try it out. Use it. If you don't want it, you don't even have to let us know, right? Just try it out for 60 days. We do feel it's the best tool out there to help you become a successful investor. We will show you how to become a successful investor in the course. We're going to be using a tool to help you get better results and faster results. All right. So whether you continue to use VectorVest after the course or not, you're going to be a fantastically confident, successful investor. We just feel using the tool is a way to make it a lot better, right? So use it during the 60 days. See what it's like. All right, so by registering today, you also get 60 days of access to one of our top-end tools called RoboTrader. We don't have time to really get into it today. Just know it's one of our top-end portfolio management tools. You'll get 60 days to play with that as well. It comes into play in that bonus module, that automation module. Here's a kind of a big one. Not kind of. This is one of my favorite ones, is that you get 6 live mastery sessions with us. So we're going to give you the course, right? You can go through the course at your own pace. You can go through the entire thing this weekend if you wanted to. But over the next 6 weeks, starting the second week of July, actually, we are going to have live sessions with you once a week. And we're going to go module by module. We're not going to reteach the course, but we're going to be there with you each week. So module 1 will be 1 week. Module 2 will be the next week. And we're going to help you implement the things you are learning because we want you to get results. Now, if you can't make it to those, we will provide recordings to them. But we're going to be there holding your hand throughout this whole thing. Plus, you get access to view our paper portfolio. So we're going to invite you to our Thursday. We have a coaching session on Thursdays as well. That's where we're going to get together with our coaching clients and where we implement the techniques with them on a weekly basis. And we show them a paper portfolio and what stocks we're buying and selling and how we're implementing the system. So you can kind of sit over our shoulder and see, what stocks we're trading, how we're managing them. It's a paper portfolio, but we're treating it like as if it were just a real portfolio. We manage it just like you would. Huge bonus. All right. Total value of everything, over $1,900, everything you see here. All right. So obviously, what does it cost? You might think, oh man, is this course going to be like a $2,000 course? Is it going to be $1,000? Is it going to be $500? Well, we probably should charge those. It's that good. And the results that you can get and create for yourself are life-changing. We've seen how this course has done that for so many people already. But we want you to be able to enroll today and get results right away. So we wanted to make this a pretty no-brainer exercise for you. Is it worth those prices? Yes. And honestly, we do sell this course year-round for $495. It doesn't come with all the bonuses. You can buy a self-study version of it for almost $500, but not today. I'm going to show you 2 prices. One is if you don't buy right away, if you decide to buy tomorrow, but I'm going to give you a little extra bonus if you decide to make a decision right away. Like I like to reward people who act fast. So the first one is a special webinar price of $295. I'm going to discount that even more in just a second. But you're going to get the entire course, the live coachings, all the bonuses that we just talked about. All right, if you go to VectorVest.com/TSIC, we're going to put that link into the chat, VectorVest.com/TSIC. If you go there, you're going to see a special discounted rate. Because if you order before we're done today, not the $295, you can get an additional $50 off. We want to make it an even bigger no-brainer for you. $245. And again, remember, it's 100% money back guarantee. But we really think you're going to like it and see results. I want to make one quick note. If you've taken this course before, we've got some people on today's webinar who have taken this course before, and if you want a refresher, let's say you took the course over a year ago and you're like, you know what, I want to go through it again. We have a refresher rate of $95. Just you have to call our team though. Call or email to get that. All right. Now, we've asked some people who have taken this course before to tell you what they basically give you some advice, what they felt about this course. John said, hey, this course will help you make better trades, reduce your losses, and earn more profits with less time. Lucine says, just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically. Richie says, I've taken several other courses out there, and this one is among the easiest to implement and stay on track. Robert says, it's an excellent course and well worth the money you'll spend and likely earn enough in your first trades to pay for the course. And then Danny says, take the course and follow what it tells you. You will not regret it if you are serious about being successful. I mean, if you just think about this, what have you been averaging? Not just over the past 12 months, but over the past 3-5 years. Are you where you want to be? Right? What do you want your average to be? And here's a key question. Do you have a plan to get there? If you don't, ask yourself what it would cost you not to do this. How much money will you lose in the market? If you keep doing the same thing, you're going to get the same results. Then ask yourself how your life would be different if you do this and it works. What if it does work? What if you can be the next Kamel, the next Tim, the next Rick, who we'll talk about in a minute? Right? What if that'll happen for you? Remember, 100% money back guarantee. The risk is all ours. So if you order before the end of the webinar, you get that additional discount. If you choose to wait until after the webinar, it would go back up to $295. And then registration closes on Tuesday. So you only have like 4 days to make up your mind. 4 or 5 days. And then registration closes. The bonuses go away. The self-study goes back up to $495. All right? So in a moment, I'm about to begin our Q&A, where I'll answer whatever questions you've got. Before I do, in the chat box, like Deacon just typed in, Deacon said, I ordered. So if you're like Deacon and you're in, just type 2 words, I'm in. Because I want to welcome you, basically. Myself, Todd, John, we're all here. All right, we want to welcome you to the course. So you can just type in 2 words, I'm in. And I see Shannon. Shannon, I see you typed in, oh no, I just paid $495 this morning before I knew about this. Shannon, well, first off, I think it's worth that, right? I think it's worth that. What I'm going to ask you to do, Shannon, give our team a call and explain the situation, and they should help you out. Let them know that you talked to Brian during the webinar, and they should be able to help you. Okay, Shannon? Just give me a shout in the chat box that you heard me. All right. So let's see. Lawrence, welcome. Great to have you with us. Ken, welcome. Ken says, I just signed up. I'm in. Robert says, I'm in. Those are all of you who are saying I'm in. You should check your email because we're sending you an email with all the details. So check your email. Also check your junk or your spam folder because sometimes it sneaks over there. All right. It'll have all the details in it. Now, before I get to the questions that you're typing in, I want to say one quick thing and then cover the common questions I typically see. Todd and I, he and I are the co-coaches for this, and John is also a member of our team who help you with the successful investing. We are super excited to do this with you. We know this will transform lives. It'll transform your life. Not just financially. Financially is one thing. But there's so many people that we talk to who have an emotional shift as well. It's almost like they sit up straighter. They become not a better person, but a different person. They're just more confident and in control. And if you remember Rick from earlier, remember I asked him how he sees things changing in his life in the future? He and I had an hour-long Skype conversation. He's like, hey, Brian, this already has changed things for me. He was moving across the country, and he said, you know what? I was able to buy a little bit bigger of a house than I had planned on. Plus, his wife, she was originally thinking about getting another job. And he said, you can if you want, but you don't need to. All right? So again, remember, if you've taken this course before and you want the refresher rate, it's only $95. Give our team a call. One thing you might be worried about is, hey, I don't have a lot of time. I'm busy with work, or, I'm afraid to do this on my own. I've been relying on other people. Well, Carol here, when she came to us, she said she had no time to manage her investments because she was still working and trying to juggle that along with her father's estate because her father had just passed away. She had paid a money manager for several years, but was frustrated because the money manager was only able to make 1% per year. But she was fearful to do things on her own. She thought she might lose money. After taking this course and implementing the system, she's no longer afraid. She said she's had 60% winning trades. She's been outperforming the money manager by 8 times. Remember, she was the person who was able to fire her money manager. Not only has she gotten great financial results, she's got confidence in herself now, and she's having fun. All right, so again, if you order before the end of today's webinar, you get that additional $50 off. It's $245. It's the lowest possible price because our elite pricing is $247.50. So this is the lowest possible price. Now, if you wait until after the webinar, the price will go to $295. If you're an elite member, you still get the elite pricing. That reduced price, the $295 price, and the bonuses, they will only be around until Tuesday. Then at Tuesday at 5, the price will go back up to $495. All right. Again, go to VectorVest.com/TSIC. Get yourself registered before registration closes. Let's begin our Q&A. So in the chat box, if you, like Tasha just typed in, I'm in. If I missed you typing in, I'm in, and I didn't call out your name, just type it in again. Because there have been a lot of comments flying by on my screen. I wasn't able to see them all. So just type I'm in into the chat. I see Shannon, thank you for letting me know in the chat that you heard me. Shannon's like, I think it's worth it too. I paid $4.95. I think it's worth it. All right. Theric says, I'm almost in. All right, so let me expand out the questions that are coming in. All right. Bob says, is the course a day course or when is it taught if you have a full-time job? Great question. Let me first say this, Bob. The course itself is taught, it's a recorded course. And I'll tell you about both that and the live sessions. Let me actually log in. Let me see if I can pull up a web browser. Hold on one second. I want to show you what the course looks like. All right. So when you log, it's in the VectorVest University. So after you sign up, now I actually completed the course, so I'm going to go to my completed tab. I'm going to view the course. So Bob, you can actually go through the course at your own speed. Because you can see, if I go to module 1, there's the presentation here. Then there's a video of the mastery session, which I'll talk about the mastery sessions in more detail in a moment. We make videos for the homework assignment. We put together a test. So the idea is that you would go through the modules on your own. And then you'll write down questions. Where do you need help? Go through the homework. Jot those things down. And then come to the mastery sessions and get help. Speaking of the mastery sessions, if I show those to you here, the mastery sessions will start on July 14th. These are live every Wednesday for 6 weeks at 4:30 Eastern time. That's when we've done a lot of webinars, and we find we get the most people to show up at that time slot. That's why we pick it. All right, so 4:30 Eastern time. Pardon me. Those are our mastery sessions, and in those mastery sessions, each week, like on the 14th, we'll focus on module 1. This week we'll focus on module 2, 3. Now, as we go, of course, if you have on the 28th, if you have questions from module 3, we'll answer them. If you have questions back from modules 2 or 1. All right, so we try to keep things organized. So those are the mastery sessions. We will also invite you to, we have a coaching session every Thursday. Now the coaching sessions, we ask that you be more of a little bit like a fly on the wall, because at least for the first couple that you might attend, those are going to be at noon on Thursdays. And if you come to those sessions, you're going to see that those are open to our coaching clients where they've already been through the training and they're just doing week by week maintenance and implementation. So you can come to those and a lot of people get a ton more value if they attend both, because they can see things being implemented on a week-by-week basis. And both of those will be recorded. In fact, I think I forgot to show you. If I scroll down in here, you can see right here where it says bonus coaching. We'll give you a recording of all 6 of those Thursday sessions in case you can't attend or you just want to watch them again. So you can see Successful Investing Group Coaching. You can see, you can actually watch and listen to the ones that we did a few months ago. And then the mastery sessions, yes, those are recorded. You can see the links are right here. Mastery session. Right, mastery support session. Those are in there as well. And you can actually go in there and listen to the recordings of our mastery sessions from the last time. All right. Mary Jane says, I'm in. Welcome aboard, Mary Jane. Therick and Ken, welcome to both of you. Great to have you in the course. And the course, you have a full year of access to the course. So you don't have to race. You don't have to finish it in 6 weeks. You have a full year to go through it. All right. So that, Bob, hopefully that answered your question about, is the course a day course or when is it taught if you have a full-time job? And remember, if you have questions after hours, we have our support team that you can call. All right, so if I come back over here, our support team, and you could, if you need anything now, it's 888-658-7638. We have international phone numbers as well, but this works for North America. If you call that number, we have a support team based here in North Carolina in the United States. Call us, ask whatever questions you want. We're there for you. All right, so Al, I think I answered your question. You said, what day and time are the live mastery sessions? Pardon me. Bernard says, how do you show earnings as a volatile line rather than quarterly? So what we do, Bernard, is it's a proprietary formula. All right, but what we do is we combine the historical earnings, we combine what's currently being reported, and we purchase forecasts of earnings. And all of those things get put into a formula. Now, a couple of those items don't change, right? Current reported earnings and historic earnings. The forecasted earnings, there's changes to forecasts, and we buy the forecasts that we get, those could get changed. And there's some other tweaks that are in there, but that's kind of the big picture idea, Bernard. Deacon says, can there be a condition where a stock I like is going up, but the overall market is going down? And is there a way to deal with this? Some stocks go up when the market drops. That is exactly right, and we just don't buy them. The market trumps everything, Deke. Okay? Just like the Olympics are about to start sometime soon, right? If you take the best Olympic swimmer and you throw them into the river, and you ask them to swim upstream, the Olympic swimmer might actually make some headway. But I'm not going to be betting on that. Eventually, the tide, the current, is going to pull down even the best swimmer. So if the market is moving down, even good stocks will eventually get pulled down with it. So we just don't buy stocks in down markets. Tasha says, are the mastery classes recorded? Yes, they are. Robert says, do we need to use your tools after our 60 days is over in order to figure out earnings and I think you mean safety. No, we think our tools are the best. Like when I was showing in today's session, we like our earnings per share because it makes it super simple that you just pull up a graph and earnings is there. You can find earnings data out there. Go to Yahoo Finance, go to Google Finance. You can get data from your broker, but you would have to spend a little bit more time kind of looking at what they've done historically and looking at some of the projections and kind of look at seeing if those bar charts are going higher. Right? We do a lot of that analysis, but you can do it. like we always say, VectorVest is a tremendous tool for speed and efficiency. And we also think it helps you get better results. Pam says, when does the next 6 mastery sessions and group coaching start after the summer? I don't have the date. It's usually once a quarter, maybe. So, but Pam, I don't remember. It might be out. Don't quote me on this, Pam. It could be in October, but I don't know. L says, how about support for Canada? Yep, we've got plenty of support for Canada. Actually, you can call that same phone number that you see on the screen there, and we will help you. We have a gentleman named Stan Heller. He is our Canadian consultant. He does webinars each week, and they're specifically dedicated for people in Canada. Let me just pull it back up here. And you can, if I scroll down in the course, you see down here, our international managing directors actually did mastery sessions just for people in their markets. So you can see here in Canada, there was a Canadian mastery session. All right. Mary Jane, it says, after a year, does it cost $95 if I want to do a refresher of the course? If you want to do a refresher, sure. Yes, that is correct. Mohammed says, I'm in. Welcome, Mohammed. Great to have you. Pam says, what is the, I think you mean average? Average time to complete each module. Each module is between 60 to, I think one or two of them might be nearing the 90 minutes. Like maybe the when to sell. Let me see if I can, just the module itself. Oh, wow, this one's an hour and 41 minutes. So we had a lot to talk about in the when to sell module. But like in module 1, that one's 55 minutes. So that's just to go through the module. Then you might want to spend maybe 15 to 30 minutes doing the homework, depending on the week. And it's up to you on whether you want to attend the mastery sessions. So maybe 60 to 90 minutes there. So on a weekly basis, you probably want to dedicate, if you really want to go through everything, a few hours. But again, I mean, remember, you have access to things for a full year. All right. Neil says, what tools will be needed to successfully work the 6-week course? Well, we give you access to everything. The main thing, if you want to go through the course using the VectorVest tool, we give you access to that. That's the only tool we will really use. And we'll show, and module 6, we'll get into the broker software. So we'll show examples of a couple of different brokers. Christopher says, do you offer real-time stock prices and charts for our trading? VectorVest as a company does have a real-time product. During this course, if you don't have the real-time, already, we give you a 15-minute delayed streaming data. So it'll look like it's real-time because it's ticking, tick, tick, tick. Like the numbers are changing continuously, but it's on a 15-minute delay. The reason we do that, real time costs money. We get audited for real time, all the people we're giving real time data to. So it's going to cost money. And if you live in Canada, there's, I don't know how all of you live in Canada with all of the fees, but it's like hundreds of dollars for those types of fees. So instead, we'll give you what we feel is great data. It's 15-minute delay. And we're going to teach you a system where you don't need to be looking at real-time data. You don't have to. Your broker will give you can pull up a stock with your broker and see it in real time. The analysis that you do, you don't need to be looking at real-time data. Remember, we're slowing things down. We're being more prudent, right? We're being more prudent. You don't have to be hovering over your computer. All right? So, Jim, you asked, how long is the recorded course available once we sign up? The recorded course is available for a full 12 months. Jim also said, great presentation, by the way. Thanks, Jim. All right. So Pam says, is the price in U.S. dollars only? Yeah, it's U.S. dollars. Yes. $245 US. All right. So with that, remember, go to vectorvest.com/TSIC. The link is in the chat box. Just click on that link in the chat box, or you can type it into your web browser. That'll work too. We really look forward to having you in class. Todd and I and John, we all love teaching this course because we see how it changes people. The comments that we see in our chat box after Module 6 it lifts your spirits, basically, seeing people say, wow, I feel so much more confident in what I'm doing. All right. So we look forward to having you in class. Pricing goes up. Actually, registration closes. All the bonuses, I shouldn't say all the bonuses, a lot of the bonuses go away. The price goes up on Tuesday at 5 p.m. So don't wait. All right, or you'll miss out on a bunch of stuff. So we will see you in class.